Welcome to another episode of the All Tens Podcast. I'm your co-host, Josh West. With me, as always, Clay Harris. And today, Clay, we're digging deeper into that EOS toolbox and specifically focusing on something many business owners worry about often. It's cash. And we're going to talk through cash flow drivers and how we can help business owners with that specific thing. Clay, what do you got for us?
Yeah, well, so before we kind of dive in, I think one of the things that's surprising to me fairly often in the session room is how kind of little, and that's the wrong way to say it, is the diversity of financial acumen on the team. And so what happens often when I'm working with leadership teams is that there's one or two people on the team who seem to know everything. And whether or not they do, the rest of the team turns to them anytime a financial question comes up. Now, there's some real danger there, right? One danger is that, like, they don't actually know what the heck they're talking about, and people are turning to them blindly, and they're being led astray, right? Second thing is, like, listen, if you want to be on the leadership team, I need you to own P&L for your team. Own profit and loss. Own all those ideas for your team. Like, sometimes in the session room, when I get into financial results and I'm sitting there like running like a mini MBA course talking about the interplay between a P&L and a balance sheet and a cash flow statement and how these things all go together, and like the eyes glaze over, and I'm like, oh, guys, like there's 4 people on the leadership team and no one understands how this all works. Like, who owns the financial health of the business? So like, just contextually, it's really important for leadership team members to really understand and own how money comes in and out of the business. Like we pay bills with cash. We pay ourselves with cash. Our client, like, widgets are cool, but the world works on the US dollar, baby. You know what I'm saying? Like, let's go. So, the importance of this kind of exercise, and in the EOS world, we do an exercise with our leadership teams called the 8 cash flow drivers. And we're not going to go into like that today. We're just kind of going to hit the high notes of it. But the importance of this, right, is to kind of really simplify for the leadership team, simplify and create alignment around the most important activities of the business that drive cash. Because if you kind of recognize that, man, if you're trying to understand a cash flow statement and a profit and loss statement and a balance sheet, that's like really hard, and people go to school for a long time for those things. But if you as a leadership team can get alignment around the most important things that drive cash or suck cash out of the business and hammer those, then you're doing the right work. Simplify and create alignment. You know what I'm saying, Joshy? Around, yeah.
100%, Clay. And as you talked about, there may be that 1 or 2 people on the leadership team that everyone else is looking to. Oftentimes, this is the person who's sitting in the finance seat. And when we go over this exercise in session, you know, there's 2 ways that it can go. And I find that it goes the latter of these 2, which is, 1, your finance leader could be very bored with this exercise. They're like, yeah, I got it, right? But that's not the point. And it's what you talked about, Clay, is, can we get everyone to think that way? And so I find that the financial leaders end up really loving going through this exercise because we get everyone else on the leadership team engaged and talking and thinking about things like the financial leader. And so instead of everybody looking to them, now we've got everybody thinking that way. And also, Clay, I love the way you framed it. It's, can you run your department like a business? And in my past career, particularly on the sales and marketing side, I thought about that like a mini business where we've got contracts to get signed, we've got revenue to come in, and I've got to be able to make payroll in my department. And I've also got to be able to buy all of the media and ads and conferences and everything else. And at the end of the quarter, am I making or losing money? And so getting everybody on the same page and thinking like that is pretty powerful. I think we can start at the top there also with revenue, right? One of the things, obviously, that can impact cash flow down the line is how much we're bringing in. So if we start there, what are the things, team, that we can do to increase revenue? And Clay, as you've worked with teams, what have you seen when you go through this exercise?
So generally, what happens is people say things like revenue, and that's great. But when you have this alignment or this discussion to drive alignment, not all revenue is created equal, right? So when we talk about driving cash, what we're not talking about is like just top line. We might be talking about like, all right, like what's the most profitable thing that has the most potential to grow? What has the biggest margin? So what we're doing is trying to focus, I say this way too often, but it's like specificity matters. And so like, we might not want to just say revenue, but we might want to say like, fixed fee project revenue or, like kind of like that's an important thing that we must drive home because our resale of licensing is 4% margin. Like we can hammer that all day, but it's not going to help cash as much as 45% fixed fee project. So getting alignment with the team around like what kind of revenue matters most to drive cash. That's one. You know what I'm saying? Like, and that's different. Like I have a bank where like, reselling Fannie Mae loans ain't as good. Is not as good. That was my North Carolina coming out. Isn't as good as like, business loans over 200 grand, right? Or whatever, right? Like,
I've got several examples on my side where I've got clients and maybe they've got a commercial and a residential side to the business. And it's like, but which one of those is growing? Which one of those is more profitable? Which one do we want to pay more attention to? Additionally, I was working with another client recently, and they really have one source of where all of their jobs come from. And they made it a point and a goal to get a higher percentage of their revenue coming from other sources, just so that they're not so beholden to this one source. And that one source is susceptible to a cycle, and there could be downturns in the economy. And when that happens, well, their entire business is going to take a hit. And so they're trying to mitigate against that. And so your point about specificity is well made and well heard in that, we've got different types and of revenue coming in, and we've got to make sure that when we're focusing on one or turning away from another one, or perhaps doing away with it altogether, that we're all on the same page and got a clear understanding.
Yeah. So like adding revenue, good. Lowering costs also help increase cash flow. And this is like one of the things where sometimes you get in the room and like, well, the number one problem here is we don't sell enough. Like, sure, that would be great if we could just sell everything all the time. But also we got to control costs really well. And for most of my clients, when we start moving into that side of the ledger of like, how do we reduce kind of costs? Some of it is, the most expensive line item, the most expensive cog for most of them is related to labor, right? And so most of my clients are kind of in the B2B space, so labor is a really important number for them, and sometimes that's rooted in we just overhired, or sometimes it's just in like we need to reduce overtime. Like overtime might be the biggest, or sometimes it's things like no call, no shows on shift work are like big drivers of costs or whatever. Those sorts of things. Again, specificity. If you do it on the revenue side, do it on the cost side. Labor is an easy place to start, but it's not just labor. Give me a little bit more around what's flexible. What do we actually have the ability to change? What is driving great cash flow when it comes to labor? Because you might, but most of the time you're not going to go out and fire 20% tomorrow. How else could you go find 20% in labor? What is variable in there that you could change? You know what I'm saying?
Labor is always a big ticket item. I joke that if you're not running a business that needs to buy jet fuel, your number one line item is probably payroll. But Clay, also, as you talked about that, certainly we're at the end of 2025 here. And as I look back on the year in total, there was a lot around tariffs, inflation, supply chain, and I had multiple clients that really had to look at their inventory for those businesses, particularly, in the B2B space that carried inventory. And, it was a matter of, can you go talk to other vendors? Can you cut a better deal? Do you have a very good handle on what the turnover of the inventory is like? Is there a lot of stuff that's just taking up warehouse space that you're paying for? You're not turning that inventory over in time, those sorts of things. So, it's not just sell more and it's not just fire people, but there's also other ways that we can help drive a healthier bottom line there. And certainly, that's another one to take a look at.
Well, I mean, you said bottom line, but we're talking about cash flow, and not to like be pedantic around it, but they're not necessarily the same thing, right?
Sure.
And so like profitability doesn't, for sure, profitable businesses should generate good cash, but it depends on how you're financing the growth and all these sorts of things. What we need is to make sure that the business is healthy in terms of cash flow. To that point, sometimes things like AR aging show up on the cash flow drivers, right?
Mm-hmm.
It doesn't necessarily relate to profitability, but it matters to my checking account to make sure I can hit payroll, right? If I'm not collecting money in a timely manner, or I'm letting bills pile up and my AP is going crazy, that's stuff that shows up on the balance sheet, right?
Mm-hmm.
It doesn't necessarily show up from profitability point of view, but if you're not getting paid or you're not paying your bills, you might not have a good handle on how well you're going to look 3 months from now, even if everything looks profitable right now from a P&L perspective. Anyway, there's some complexity there, but like this is about driving cash, not just about whether or not we're delivering stuff at a great margin, because you just said it, Josh, when we were in a quick break, that profitable companies can still go can still run out of money.
They can.
It happens all the time. And so we got to pay attention to cash as a leadership team. And so there's a bunch of different like nuances for every business. But the point of this whole conversation really is that as a leadership team, you get alignment around the top 6 or 7, 8, maybe, right? Cash flow drivers so that you can actually make sure the business is healthy from a cash perspective. Not 37, not 350, but we call it 8. Let's call it 8. The 8 most important things that will drive cash. So, Josh, let's say our listeners have been doing this in their head. They've talked with their colleagues, their peers around what those most important things are. Then what? We've got some alignment. Then what?
So, as always, if we just talk about it and then we leave the room and we're not going to do anything about it, then did anything really happen? And so, first and foremost, once we get alignment around it, then we've got to measure it. And we've got a place for that. And it's measurables on the scorecard. So once we've identified those things, then are we tracking that? So you started to talk about, the AR, AP, pileups, those sorts of things. And so a lot of times that may end up on the scorecard. Are we tracking that? Is it trending in the wrong direction? And are the alarms going to go off before it becomes too much of a problem for us? And so I would say that's the first thing that we do is we make sure that we are looking at those most important things. What do you got?
The second thing is like, or whatever, you come up with your own list. But another way to kind of keep track of these is like very often I meet with business leaders and I'm like, let's see your financial reports. And they bring me like a stack of 40 pages and like, they don't know where to look. My guess is that these things that you just talked about show up on the P&L or the balance sheet or the cash flow statement. Highlight them. These 8 things, there might be 7 lines or 6 lines on the P&L, 1 line on the balance sheet, 1 line on the cash flow statement. Highlight them so that when you're looking through your stack of reports, you can go look at the most important things easily. Instead of like digging through to page 17 of the P&L where like you have everything so well organized that you've got $14 in staplers and $14.75 in staples. Cool. Like, I'm glad that you have a nice chart of accounts, but it's distracting you from talking about the most important things, which you've just spent a bunch of time and brain cycles thinking like, these are the most 8 important things. If you're every month looking at all 1,400 accounts in your chart of accounts, you're wasting time. The whole point of this is focus on the most important things. And so like scorecard, yes, 100%, 52 chances a year, because it's a weekly number, to make it better. On your monthly or quarterly financial reports, look at the most important things, not all the things. You're not an auditor, you're a leader. Go be a leader, right? And so know where they are and be able to get to them quickly. Anyway, they'll often show up in rocks also, right? Make big progress on improving cash flow. These 8 things, they'll show up in rocks. But I think the most important thing, and then is like this just becomes a practice, right? Like just like anything else, whether you do it once a quarter, twice a year, once a year, just kind of keep refreshing this with your team and making sure that as you refresh it, because your business changes, I promise. As your business changes, the leadership team is aligned on the most important things, and you're tracking them, scorecards, reporting, rocks, those sorts of things, so that they're coming to life. You know what I'm saying, Joshy?
Absolutely. And, I'll bring it back to the top of the call when we started to set context here for it, as you would say, that the diversity of the financial acumen on the team. And, it's not everybody's job to be a CPA on the team, but having a baseline fundamental financial understanding and be able to think about your role within the organization, and particularly if you're running a department, thinking about it like a mini business within the business, I think is helpful. And also, I feel as though all of our financial leaders out there would rejoice in that message getting out to everyone else, and kind of occasionally being in the financial leader shoes and thinking about things from that perspective.
Agreed. Any other nuggets before we wrap it up here, Josh?
No, I'll let you take them home, Clay.
Cool. I think if there's one thing you do out of this, if you listen to this episode and you feel like, man, we could do some improvement there, if you could align with your leadership team on the 6 or 7 or 8 most important things, and then just highlight them on the monthly financial reports that I know show up in every person's inbox every month, that 90% of the time get ignored. If you just highlight the most important things, I promise they'll start getting better because people will pay attention to them more closely. Anyway, I hope that you do that. If you want to talk more about it, Josh and I would love to hear from you. We're both EOS implementers. I'm in North Carolina, he's in Arizona, but we do sessions all over the place and virtually. And we would love to hear from you if EOS is something you're interested in. We'd also love to hear from you on feedback on the podcast. So if you have any topics you'd like to hear about, or guests you'd like us to have on, or even if you might want to hop on sometime, just let us know. We're most active on LinkedIn, but you can find us anywhere you listen to the podcast. Please like, rate, share, do all those sorts of things. And we can't wait to talk to you again next week. Until then, I hope you have a good week, and bye, Joshy.
Bye, Clay.